Hello and welcome to Sectors Up Close. I'm David Pollard. Today we're talking about the outlook for crude oil markets, and my guest is Jim Mitchell, head of Americas Oil Analysts at Refinitiv. Well, it could be a big week for those crude oil markets. OPEC and its allies, including Russia, meet in Vienna on June the 4th to decide on their output policy. The group, known as OPEC Plus, agreed in early April to increase crude oil production cuts. That surprise announcement helped push up prices by about $9 to above 87 per barrel over the days that followed, but Brent prices have since lost those gains. And in the very latest Reuters poll, analysts see Brent holding below $90 a barrel throughout this year as economic headwinds set in. So will OPEC Plus cut again? And what could it all mean for crude prices ahead? Well, joining me now to discuss just that is Jim Mitchell, head of America's Oil Analysts at Refinitiv. Welcome to Sectors Up Close, Jim. Now, Saudi Arabia has warned it wants to inflict pain on short sellers, what it calls an ouch moment. That must be a pretty clear signal of an output cut at this meeting, isn't it?
Yeah, isn't it high drama in the market right now? It's outstanding, with the speculators taking pretty sizable short positions. Although I will say they have been decreased in the last 3 weeks, and actually open interest in total has decreased in the last 3 weeks. Those short positions have drawn the ire of, as you mentioned, the Crown Prince of Saudi Arabia, Mohammed bin Salman, who has talked about ouching the shorts. But it's also drawn the ire of the Deputy Prime Minister of Russia, Alexander Novak, who has very ominously been talking about, oh, don't do anything, we'll just take care of it.
So the jury's out by the sounds of it, but what exactly is Saudi Arabia's rationale here? Why is it willing to put its credibility at stake in the way that it is doing?
So when Saudi Arabia starts talking about cuts, I believe that they're looking at the world economy, and they sell a lot of oil into Asia. They're looking at the Asian economy and the European economy, and to a lesser extent the U.S. economy, and they're seeing some cracks.
Now, the deadline for resolving the US debt ceiling standoff talks in Washington coincides more or less with this OPEC Plus meeting. How do traders view that possible, rather unfortunate confluence of those two quite big events?
That confluence is coming together at a particularly interesting time. I'm not sure that anybody in the market feels, at least in the U.S. market, feels that there is going to be a U.S. default. The consequences of that are catastrophic. Now, as for the cuts, this goes to credibility for MBS, who I will say has been very credible. He has done what he has said he will do. And I believe that he will cut after the meeting on the 4th. Now, what does that cut look like? That's going to be interesting as well, because it doesn't appear that Russia is or has cut from what they said from the last meeting. They said they were going to cut 500,000 barrels. They had record exports in March for crude oil. Second was May, literally the month we just finished. And that is just ahead of January of 2023. So Russia's putting out a pretty substantial amount of oil.
Let's talk about demand and prices, and we'll start with the US, where inventory numbers have been pointing to some tightness in markets. What's your view there?
Are the markets getting tight? It doesn't really appear so. The US economy has been chugging right along, and one only has to look at the refinery cracks in the US. PAD 1, which is the Atlantic coast, you're looking at cracks in the low 30s. That's pretty good. In the Gulf Coast, you're looking at cracks in the high teens to low 20s. Again, that's really good for this particular area where there's a lot of oil production and a lot of refineries. PAD 5, the Pacific coast, again, cracks in the upper 20s and low 30s. So it doesn't appear that there's a whole lot of shortage here.
And when we last spoke to you back in April, you said that $100 a barrel this year might be possible, but possibly not for very long. Is that still your view, or have you kind of, traded downwards a bit?
Yes, I think with the market, if we do get to $100, it's very likely going to be a spike. It's going to be some short-term, probably supply issue that gets us there if we get there. the cracks in the economies in China and in Europe, it looks like there's going to be some pressure. So if they cut such that they're anticipating this, everything changes. If they make substantial cuts.
OK, Jim, it's been fascinating to hear your views today. Jim Mitchell, head of Americas Oil Analysts at Refinitiv, thank you for being with us. And that is your roundup of the oil markets. I'm David Pollard, and this is Reuters.